Hey, welcome everybody to the 40 Finance channel. Today we're going to be digging through the Seeking Alpha Quant ratings and identifying the top large cap stocks that they have as strong buys right now. So here we are in November of 2022 with this period of basically flat to negative momentum across the stock market. We are all, of course, awaiting to see what Mr. Powell has for the future for us. But somewhere out there, people are buying stocks. And while I'm sticking to my guns on the QQQ rebound and Mega Tech rebound, I thought it would be interesting to share with you some different perspectives on other stocks that are showing up on other dashboards. And this video comes at a great time to dig into Seeking Alpha because they're having a monster sale right now. $99 for their premium service, which does include access to these quant ratings and all the different ways you can sort through them. $99 for the entire year for Seeking Alpha Premium. My affiliate link is in the description to get you that special offer, potentially support the channel, which I really appreciate. So as we go through this, if you're interested in checking it out, look in the description for that special link. Okay, now before we jump in, let's take a look at exactly what we're going to be looking at with these quant scores, because I don't want to lead anyone off the trail. These are not my quant scores. These are from Seeking Alpha. And we'll just get right to the intro pitch here. What are quant ratings and factor grades? Seeking Alpha's quant ratings are objective, unemotional evaluation of each stock based on data such as company's financial statements, price performance, and analyst estimates of the company's future revenue and earnings. Then I'll skip down here to how are they useful to investors. Seeking Alpha's quant ratings, factor grades provide investors with an instant characterization of each stock. This makes it easy to find or rule out stocks based on your investment criteria. For investors wanting to do more research, the quant ratings and factor grades provide a springboard for further research. You can quickly see where a stock is strong or weak, and with one click you can view the underlying data and sector averages to perform your own valuation. All right, and then finally, are they for short-term or long-term investors? They are appropriate for both short and long-term. Value, growth, and profitability factors identify mispriced securities, and the momentum and EPS revisions identify timeliness. But the one thing I want to underline here with any sort of quant score or algorithmic pick in the stock market, of course, is it is really just based on numbers and some momentum scores. So keep in mind that I think very few rational services are going to say, you know, get the quant score, go out and buy the stock. You obviously need to do your own research. I think we all learned that twofold over these past couple years. So make sure that if you are intrigued by any of the stocks that are presented here with Seeking Alpha's quant formula, of course you do still need to go in and do some of your own research. At the end of the day, these are just tools to speed up the research process. I mean, I think that's how you have to look at it. And they've done a good job, Seeking Alpha. I'll give you a little taste here of how their stuff is set up in terms of the color scale and how they've broken out the different factors. But first, I want to show you how I sorted this, okay? So first of all, I live in the United States, so I'm going to do United States stocks. So that's going to cut some of these down. I also adjusted this for time purposes of this video. I adjusted everything to a strong buy rating, and you can see how this would change over here. So if I just wanted to go into the buy ratings, roughly 3.5 and above, you would have more stocks. And then in addition to that, I adjusted the market cap to go after large cap stocks. If you start to fiddle with small caps, which is obviously a much bigger market, we'll switch that to strong buy, and let's move this to, 5 billion and above. You're going to get a larger amount of stocks to choose from. So there's a lot of different ways to do this depending on how you want to look at things. I mean, even 5 billion, that's like mid cap. If we go down to 1 billion into small cap world, you know, you got 223 stocks that have roughly a strong buy rating, if I adjust this just a little bit here, 4.5. You'd have 175 stocks as of this morning that have a strong buy rating with the quant formula when you expand the market cap down to 1 billion. Obviously, for this video, that would be a very long list. So we're just going to pick off the top ones, right? $10 billion or more on the market cap. Strong buy. We got 41 results. I went through here, and I sorted by market cap, and I do that to make things a little bit easier for myself because I can recognize most of these companies right off the bat. And you see who's first on the list here. That is Google, and we are about a week or so since Google has had their earnings, and they are still showing up with a strong quant score, despite the fact that many people have dug into the Google earnings, shared their own opinion. You know, it was a small miss. I went into it, I think, on one of the live streams. It wasn't going to be a strong quarter even with exchange rates. However, it was something to take into account with Google. And at least for myself, I still think Google is a good value. But when you look at the quant score for things like valuation, growth, profitability, momentum, and EPS revisions, really where Google's getting their quant positive rating is here in the profitability. Now, I'll tell you a secret about this quant score when it comes to valuation. It does compare against the sector. Okay, so that's really, really important because if you're in here with Google, you know, they're in the communications sector. So some of the things that you might appropriate with them, perhaps in technology, it's not necessarily apples to apples. All right, so if we go to interactive media and services, you bring that up, and then you go valuation to A, just to give you an idea here. Some of the ones that would come up, companies like Zedge, Trivago, Auto Home, they would be getting the A's in the valuation, but they would be limited, at least right now, on their growth. Profitability looks good. But just know that when you see something like this, going back to the quant picks, this valuation, you need to dig in a little bit more and look at the historical track record of the stock itself, because the quant formula only compares it back to the sector that it's in. All right, so Google's number one. Number two here, we have Chevron. And again, this is one where, you know, I guess mixed valuation or fair valuation here, but the profitability score, it was obviously what's carrying this one. And then momentum, not too bad at B minus, and EPS revisions, which indicate how a stock is doing in analysts' opinions. And I just did a click on that score. You can see we have EPS up. 14 EPS ratings have been up over the last 3 months. You do have 5 down, revenue trending up, revenue down. You only had one person in there. So that gives you an idea of how this works, how you can dig into it more. Let's go on to the rest of the list. We have Broadcom. All right, Broadcom. And I think that some of these names are super interesting because they are getting, I want to say, like, publicly downgraded, right, after their earnings and the way the sentiment has been around technology in general. Interesting that Broadcom is still holding a strong quant score, overall quant score of 4.66, not even at a bad valuation. B minus, and profitability holding strong. T-Mobile, obviously we have the holidays coming up. I'm going to make the assumption that T-Mobile fourth quarter is huge for them in the holiday season. It's not a company I've dug into, but it is drawing a high quant score of 4.68, showing high growth projection, high profitability, and good momentum, at least on these scores. And you have Raytheon, RTX, coming in at 4.6. Technically, it's in the top 5 because you got double Googles here. The valuation, not so hot. That's certainly not the reason it landed here. It looks like profitability, momentum, and EPS revisions, though, for Raytheon are all showing strong signs of momentum. Next, we have Caterpillar. Okay, and with Caterpillar, this one's interesting. It's not a stock that I'm in, but you have a situation into 2023 where there is, the infrastructure in the United States as well as other places, particularly after all these hurricane and events like that, building roads, all those things, they're projected to be a big part of that story. So if you believe in the infrastructure spend increasing in 2023, Caterpillar could be very interesting. Valuation, certainly not the cheapest it's ever been, but when you look at profitability, momentum, and EPS revisions, those are all trending in the right direction. ADI, Analog Devices, comes in at, it says 8, but we know it's 7, with the combo to Google. You got D+ on valuation, B+ on growth. Let's take a look at that real quick. So this, again, versus the sector. And what we have here, revenue growth year over year was 70%, revenue growth forward, which is probably more important, coming in at about plus 29, well above the sector median of 13%, and that is for semiconductors, as you can see down here. So ADI might be worth watching. PNC, if you're looking for a financial name, PNC Financials, getting a good score on valuation, growth, and profitability. Interestingly enough, momentum and EPS revisions are just kind of, let's just call it baseline here. So this is a really good example of what I would say would be long-term indicators, right? You have valuation, growth, and profitability on a strong suit, but maybe the short-term indicators are not as exciting with the C+ and C. When we look at Google, it's interesting how they get priced in here, but it's really just the fact that they have so much profits, right? Their profits are so deep. And if I could say anything, I would say that if we go back to exchange rates for a second, when you're bringing in this much profit, you only need a few economic things to go your way for that profit to expand. And perhaps that's why the quant score has picked this up. Next, we got Marathon, obviously adding to the oil stock run that we've seen here. Looking across the board, you have looks like fair valuation at a C, growth at B+, profitability A, momentum, EPS revisions. This has a lot of strong indicators for the short term, if you were to ask me. These are short-term metrics. Not sure in oil how long growth can continue, and obviously can change every day. But if you're getting growth in this area, if you're getting a B+ on growth, in this time in the economy, then it's certainly a good sign compared to what some others are seeing. All right, next you got GM and Ford here, right side by side, which is kind of interesting. GM and Ford, you have Ford getting a B on valuation, GM is C+. Growth looks like it favors Ford. Both of them are showing good profitability metrics, and both of them are getting A's and B's in sort of the momentum scores. So those are interesting, and depending on where you see the car market going, there could be a play in here. All right, let me skip through and just pick off a couple. Microchip technology, so there's one from the chip sector. Not good on valuation. A+ on profitability, and the momentum's looking good when you think about EPS revisions. Let's take a look at their EPS revisions here. 19 up and 23 up on revenue, so definitely good, and that could be something that actually turns around this valuation score a little bit. So, again, I think chips are getting destroyed right now. And some of it makes a lot of sense just considering where we are coming off a huge boom in technology. And then, of course, CapEx spending from technology companies comes into play here. But I feel really good about the chips over the long term. And it's interesting that in this case, Microchip technology, as well as I see on Semiconductor down here, both of these are being considered as possible buy now candidates by the Quant Score. All right, guys, so that's a free preview of some of the top large cap stocks in Seeking Alpha's Quant Score here in the first couple days of November. To me, it was interesting to see some chip stocks in there, car manufacturers in there, and then as well as Google. I don't think the oil and energy stocks were all that surprising considering the environment that we're in. But it makes for an interesting starting point on research, and it's one of the reasons that I promote Seeking Alpha on my channel so much. I literally use it every day and just poke around and find out new things seemingly every single time I log in. Anyhow, I hope you guys enjoyed this video. Don't forget to check out that special offer down below with my affiliate link. Potentially support the channel. I really appreciate it. Hope everybody's having a good day. We'll see you on the next video.